because I know a lot of you love to buy real estate inside your retirement account. And what we're going to do is we're going to talk about all the issues and problems that people have when they do it. So let's rapid fire this off, bud. Number one issue for buying real estate in retirement is?
Well, I'm going to say you don't have to, I mean, you can do it. I'm just going to tell you what the problems are, right? So you get a self-directed IRA, but here is what the problems are. And I got like 8 or 9 of them. So get ready. So here's the first thing. You must pay all cash for the property. So you really can't get financing. And if you think about it, that's how you make money in real estate. In a lot of cases, you're borrowing, you're using other people's money. In an IRA, you got to pay all cash for the property.
Well, that's not necessarily true. If I have leverage inside a property in my retirement account, isn't that UBIT tax?
Yes. I mean, if you're able to put one in, a lot of the self-directed custodians won't allow debt.
Won't accept
but
it.
You're right. I mean, that's a whole nother level. That's advanced.
Hey, thank you very much.
Number 2, okay, the annual income that you receive from your IRA is taxed as ordinary income. And if you think about it, if you have the property outside of your retirement account, some of that may actually be tax-free. Why? Because of depreciation. There is no such thing as depreciation inside of the IRA. Depreciation simply means you take a piece of the property, you get to write it off over 27.5 years, so it's what we call a non-cash deduction. So you take your income, reduce it with depreciation, and some is tax-free.
Yeah, but I can also argue that too, Al, because the income I'm not paying tax on at all. It's all deferred. Until I start pulling the dollars out, then that's when it would be taxed at ordinary income rates. So if I'm buying and flipping my homes inside my retirement account, it would all be tax-free, essentially, until I start taking distributions.
Tax deferred, not tax-free.
Tax deferred.
Yeah.
There you go.
Number 3, profits on the sale are taxed at ordinary income. Remember, ordinary income rates are the highest of rates. Capital gain rates are much cheaper, in some cases almost half of regular rates. So think about this. When your property is inside of an IRA and you sell it, and if you want to take those proceeds out, it's all ordinary income. You never get a capital gain on that.
But if I keep it in the IRA, Alan, I'm not paying tax because it's deferred. Next.
But you will.
I will.
You will at 70.5.
I'm just saying, some people are sitting in their couch right now going, Clopine doesn't know what the hell he's talking about. So I'm just speaking for them.
Thanks for clarifying.
Yeah.
Okay, this is another big one, because when you own a property outside of a retirement account, if you pass away, there's what's called a step up in basis. So the next generation gets a step up in cost basis. They can sell the property at that point and pay no tax. Inside the IRA, there is no step up in basis, and so therefore any money coming out of the IRA, even for your beneficiaries, is taxed at ordinary income.
Yeah, without a doubt. It's IRD tax, income in respected decedent, for beneficiaries. So.
You got no rebuttal on that one?
No, you're right on, brother.
Okay, so another one is required minimum distributions. We know that happens at 70.5. You have to take money out of your IRA whether you want to or not. What if you got property in your IRA and there's not enough cash to cover your required minimum distribution? You got a problem, because now you can't make your distribution. There's a 50% penalty. There's a 6% excise tax, all kinds of problems.
Right, you can't take like the kitchen out of the retirement account
and say, okay, that's my RMD.
That's my RMD, right? It's got to be cash.
I like this refrigerator because it's stainless steel.
Yeah, vacancies, there's no cash in the IRA, there's no cash flow coming in, right? And it's like, what do I do? So yeah, you blow yourself up big time there.
Another one is repairs, Joe, must be paid out of the IRA. So you actually have to have a cash account inside the IRA to pay for repairs. You cannot pay for repairs yourself, because that would be like an IRA contribution, which you may or may not qualify. And something you may not even know about is you're not even allowed to make the repairs yourself. You actually have to hire somebody, because that would be a prohibited transaction if you're doing it yourself.
Sham.
Yeah, it's a
Total
sham. Right, we don't want that. And here's another one. Let's see if I can get there. Is
no personal use. You can't even drive by it. Can't even look at it.
You can do that. Just don't step foot on the property.
Yes, don't even go to the property. Right? It's there, but you can't even touch it. You can't repair it. You can't have debt on it. So there's a lot more negatives than positive. But by all means, if you love real estate and that's your deal, and if you have cash in your retirement account, you can. But it has to be a self-directed IRA. It's completely complex. Al and I are not huge fans.